Dear students, Assalamu alaikum. You are most welcome to our new chapter for the subject of accounting first paper. This is the chapter number 6. The name is Accounting for Receivables. This chapter is applicable for class 11 and 12 business studies students. This is Mahmoud Hussain, lecturer in accounting, English media morning shift, Rajagopura Model College, Dhaka. Dear students, I think you are ready to take my new lesson for the new chapter of 6, Accounting for Receivables. Okay, I'd like to invite you for watching my new lectures. Okay, now at first you have to take your accounting learning workbook level 1 and accounting practice copy for writing. Dear learners, at the end of this chapter you can learn definition of receivables and types of receivables. Number 2, knowing about the bad and doubtful debt and provision for bad and doubtful debt. Recording procedure and calculation of bad and doubtful debt. And provision for bad and doubtful debt. Number 4, determining the new bad uncollectible debt and provision for uncollectible debt. Number 5, learn about the procedure of showing in income statement and financial position of bad debt provision, and debtors or accounts receivable. Dear students, I hope you are ready to take or you are ready to write in your accounting practice copy for the chapter of 6, Accounting for Receivables. Now, at first you have to know what is receivables. The term receivables refers to amount due from individuals and other companies or institution or parties or customers or organization. They are claims that are expected to be collected in cash. I repeat again, the term receivables refers to amount due from individuals and other companies or institution or parties or customers or organization. They are claims that are expected to be collected in cash. Now you have to know how many types of receivables. 3 types of receivables in accounting procedure. Number 1, accounts receivable. Number 2, notes receivable. Number 3, others receivable. Dear learners, I think you have written in your accounting copy the term of receivable. And what is receivables? Now you have to know what is receivable. Accounts receivable. Accounts receivable are amount owed by customers on account or on credit. The result from the sale of goods and services on account or on credit. These receivables generally are expected to be collected within 30 to 60 days. They are the most significant type of claim held by a company or business organization. Accounts receivable is a legally enforceable claim for payment from a business to its customer or clients for goods supplied and or services rendered in execution of the customer's order. Repeating again, accounts receivable. What is accounts receivable or definition of accounts receivable? Accounts receivable are amount owed by customers on account or on credit. The result from the sale of goods and services on account or on credit. These receivables generally are expected to be collected within 30 to 60 days. They are the most significant type of claim held by a company or business organization. Accounts receivable is a legally enforceable claim for payment from a business to its customer or clients for goods supplied and or services rendered in executions of the customer's order. Dear students, I think you are writing the definition of accounts receivable. Now we can go for knowing the about notes receivable and other receivable. What is notes receivable? Notes receivable are claims for which formal instrument of credit are issued as proof of the debt. A notes receivable normally extend for time period of 60 to 90 days or longer and requires the debtor to pay interest. Notes and accounts receivable that result from sales transaction are often called trade receivables. Repeat again, notes receivable are claims for which formal instrument of credit are issued as proof of the debt. A notes receivable normally extends for time period of 60 to 90 days or longer and requires the debtor to pay interest. Notes receivable and accounts receivable that result from sale transaction are often called trade receivable. Another type of receivable, other receivable. Others receivable include non-trade receivables such as interest receivable, loan to officers and advances to employees of a business concern, income tax refundable, etc. and non-trade receivables. These are unusual. Therefore, they are generally classified and reported as separate items in the balance sheet or financial position. Repeat again, what is others receivable? Others receivable include non-trade receivables such as interest receivable, loan to officers and advances to employees of a business concern, income tax refundable, etc. and non-trade receivables. These are unusual. Therefore, they are generally classified and reported as separate items in the balance sheet or financial position. Three primary accounts issues are associated with accounts receivable. First one, recognizing accounts receivable. Second one, valuing accounts receivable. Third one, disposing accounts receivable. Recognizing of accounts receivable is relatively straightforward. Generally, accounts receivable are affected by the sale of merchandise or commodity or goods or products. Valuing accounts receivable. Once receivable are recorded in the accounts, and the question is how should receivables be shown or reported in financial statement. They are shown or reported on the balance sheet or financial position as an asset. But determining the amount of report is sometimes difficult because some receivables will become uncollectible. Each customer must satisfy the credit requirements of the seller before the credit sale is approved. Under the direct write-off method, when a particular account is determined to be uncollectible, the loss is charged to bad debt expense. When this method is used, bad debt expense will show only actual losses from uncollectible. Accounts receivable will be reported as its gross amount. The allowance method of accounting for bad debt involves estimating uncollectible accounts at the end of each period. The allowance method is required for financial reporting purposes when bad debt are material in amount. It has three essential features. Number one, uncollectible accounts receivable are estimated. This estimate is treated as an expenses and it is matched against sales in the same accounting period in which the sales occurred. Second one, estimated uncollectible are debited to bad debt expense are credited to allowance for doubtful debt. Now, disposing of accounts receivable. In the normal course of events, accounts receivable are collected in cash and removed from the books. However, as credit sales and receivables have grown in significance, their normal course of events has changed. Companies now frequently sell their receivables to another company for cash, thereby shortening the cash to cash operating cycle. Sale of receivable. A common sale of receivable is a sale to a factor. A factor is a finance company or bank that buys receivables from business and then collect the payments directly from the customers. Factoring is a multi-billion dollars business. Dear learners, at this moment, you have to know what is bad debt, what is doubtful debt, what is provision for bad debt. You are watching in the slide bad debt. What is bad debt? In general sense, bad debt is the amount which is irrecoverable from customers. I repeat again, in general sense, bad debt is amount which is irrecoverable from customer. In broad sense, bad debt is an operating expenses a business incurs when it sells on credit. It results from non-payment of accounts receivable. When goods sold and service on credit, there are most always a few customers who do not pay the accounts of sales are called bad debt and are a loss and expenses of selling on credit. From the above discussion, we can say that the debt which is difficult or impossible to collect or realize or receive is called bad debt. I repeat again, in broad sense, bad debt is an operating expense a business incurs when it sells on credit. It results from non-payment of accounts receivable. When goods sold and service on credit, there are most always a few customers who do not pay the accounts of sales called bad debt and are a loss and expenses of selling on credit. From the above discussion, we can say that the debt which is difficult or impossible to collect or realize or receive is called bad debt. Second one is doubtful debt. The amount of debt which creates doubt uncertainty about realization is called doubtful debt. The amount of debt which creates doubt uncertainty about realization is called doubtful debt. Third one, provision for bad debt. A provision, a reserve or allowance which creates doubt uncertainty realization is called bad debt provision or bad debt reserve or bad debt allowance. Dear learners, I think you have written in your accounting practice copy. Now we can go for differencing between bad debt and provision for bad debt. 3 columns to be used for difference between bad debt and provision for bad debt. Number 1, points. Second one, bad debt. Third one, provision for bad debt. Definition. What is bad debt? Bad debt is the amount which is irrecoverable from customers. What is provision for bad debt? A provision which creates doubt, uncertainty, realization is called provision for bad debt. Loss. Bad debt is a loss, but provision for bad debt is the provision for future loss. Bad debt is actual loss and provision is a future loss. Realizability. It may realize or not. Future loss may occur or not. Balance shown. Balance of bad debt is to be closed at the end of the year. In each year, bad debt expense to be closed. In each institution, balance of bad debt provision to be shown at the end of the year as balance CD and next year to be opened for balance BD. entry. Generally, the bad debt entry, bad debt account is debit and Sunday debtor, that is account receivable credit. But in current situation, allowance for bad debt debit, accounts receivable credit. And provision for bad debt expense account debit, bad debt provision credit. Dear students who are watching in the slide, difference between bad debt and provision for bad debt, I think you have copied from this slide. Dear boys and girls, now the time of writing the journal entries of this chapter. This is the very important slide. Journal entries for bad debt and provision. In each year, the following entries to be recorded. I repeat again, in each year and every year, the following entries to be recorded in your accounting practice copy for journalizing the bad debt and provision. At the end of the year, each journal to be written. First one, allowance for doubtful debt or provision for doubtful or bad debt. Or reserve for bad debt account debit, accounts receivable credit. For uncollectible or bad debt. For uncollectible debt or bad debt expense. Second one to be written for estimated uncollectible debt, expenses or additional allowance of bad debt. The entries uncollectible debt expense or bad debt expense debit, allowance for bad debt account or provision for bad debt account credit. Third one is to be written or is to be closed for bad debt expense. The entries income statement debit, uncollectible debt expense or bad debt expense credit. This entry is for transferring of bad debt to income statement. Dear students, you have to write, you have to understand the only three entries for recording procedure of journal entries of bad debt and provision for bad debt. This is the very important entries. So you have to write, you have to understand, you have to recover it. I hope you're writing very attentively in your accounting practice copy. Dear boys and girls, in this chapter, the different types of requirements are available. In maximum time, you have to require for journal entries and prepare a bad debt expense account and prepare a provision for bad debt account. That is ledger for bad debt and ledger for provision for bad debt. Another requirements may be prepare an income statement to be shown for bad debt and provision for bad debt. Another one, prepare a financial position statement or financial position. That includes in bad debt and provision for bad debt and debtors amount. How to show it? So now you can copy from my slide. What kind of way to show the allowance for doubtful debt or provision for bad debt account and bad debt expense account? Dear students, you are watching in the slide. The first one, provision for bad debt account in two sides. In each account, in debit side and credit side. In left side is debit and right side is credit. In left side, 4 columns, date, account title, journal folio, taka. And right side, date, accounts title, journal folio, taka. Allowance for bad debt or provision for bad debt, you have to write in right side, that is credit side at first one, January 1, that is opening balance, is given in the question. Opening balance is to be written as indicated as balance BD. Another posting is available in right side, that is credit as bad debt expense or uncollectible debt expense. And left side, first item for posting accounts receivable And second one to be required for creating a new balance, that is balance CD, that is closing balance of this account. And second format is available for bad debt expense account or bad debt account. It has also two sides, in debit side and credit side. In left is debit and right is credit. In left side only one posting, in right side only one posting. In left side you have to write in only account the closing of the year December 31 allowance for doubtful debt or bad debt provision account to be written in debit side. In right side only one item posting, is the income statement is credit for bad debt expense. Dear learners, I think you have written in your accounting copy or procedure or format of allowance for bad debt or provision for bad debt and bad debt expense account. Now you can see in the next slide for opening an income statement or balance sheet or financial position. Income statement for the year ended 31st December, like as income summary in 2010, it may be uncollectible debt expense. This is the additional allowance amount or net amount of bad debt is to be written in income statement in each year. Same format, same rules to be followed. Another one, balance sheet or financial position as at 31st December. In each year, you have to write in current assets, under the current assets, accounts receivable, less new allowance for doubtful debt or new provision for bad debt or new bad debt to be deducted from the accounts receivable amount. This is how you have to write the bad debt and bad debt expense and accounts receivable amount in income statement and statement of financial position. Dear students, I think you have written in your accounting copy for this chapter in different types of items and different types of requirements. Again, I have gone through bad debt, doubtful debt and provision for bad debt. I repeat again, in general sense, bad debt is amount which is irrecoverable from customer. In broad sense, bad debt is an operating expense the business incurs when it sells on credit. It results from non-payment of account receivable. Doubtful debt, the amount of debt which creates doubt uncertainty about realization is called doubtful debt. Provision for bad debt, a provision which creates doubt uncertainty realization is called bad debt provision or bad debt reserve or bad debt allowance. Dear learners, thanks for being today. Inshallah, I will come taking another lecture for this chapter with a new creative question, how to solve it. Okay, till then, Allah Hafiz.